Markets are waking up to tariff noise and Fed uncertainty. Are you ready to protect or grow your capital today? Greetings, market enthusiasts, looking to sharpen your investment strategy and navigate today's economic landscape? If you've let opportunities slip or been blindsided by sudden changes, stick with us. This September 4th, 2025, update delivers actionable insights to transform your portfolio. Welcome to AmosFinance, your go-to source for breaking down finance for novices and veterans alike. I'm John Hawk, your guide, and today we're exploring the latest in stocks, digital currencies, global events, and more. Stay to the end for a critical tip that could shield your capital or spark a big win. If this hits home, like now, subscribe for daily updates, drop your top financial question in the comments, and ring the bell. Let's build this community together. We'll tackle indices, key stocks, bonds, forex, commodities, earnings, crypto, geopolitics, central banks, inflation, trends, and a vital closing thought. How will this impact your wealth? Let's jump in and turn insights into action. We begin with the major indices, your pulse on market health, showing where growth is headed and how it touches your investments. The S&P 500 kicks off at 6451 points, up a modest 0.05% from yesterday's 6450, holding firm despite tariff chatter that could sway your diversified assets. Nasdaq edges up to around 20,1300, gaining 0.10% in early trading, with tech finding its footing. Dow Jones climbs to 45,500, up 0.15%, lifting industrial players. FTSE 100 sits at 9164.50, flat with a 0.100% move sensitive to global shifts. Nikkei rises to 42,600, up 0.02%, buoyed by Bojay hints. Year-to-date gains range from 12–17%. For you, a 25K Nasdaq stake might be up 3.5K this year and add $25 today. US markets outpace UK imports thanks to trade flows. Impact: a small rise could boost your portfolio 0.52% if you act fast. Move: stick with US-focused ETFs like VOO, using upticks to adjust. Feeling bullish on America? Share below. Now the top 5, these heavyweights can drive your profits or drag them down, so pay close attention to cash in. Apple hits 232 at up 0.09%. Demand stays solid, but tariff hikes on parts could sting your tech plays. Tesla reaches 33300, up 0.24%, leading green transport with border issues easing. Eco investors ride this wave. Microsoft climbs to 50600, up 0.06%. Cloud power steadies the ship. Amazon rises to 220.7050, up 0.22%. Retail strength shines through. Meta advances to 733 clocked, up 0.13%. Ad revenue fuels growth. Year-to-date, they've climbed 18.55%, and today's gains add to that. A 0.24% Tesla jump adds $800 to a 303K holding. Impact: upsides could mean 5–15% swings. Plan, spread out, mix in growth stocks. Which one grabs you? Like if Tesla's your favorite. Shifting to bonds, your anchor in stock turbulence. The US 10-year drops to 4.20%, down 0.07% today, suggesting bets on looser policy to ease debt. The 30-year falls to 4.88%, down 0.09%. Germany's 10-year at 2.725%, UK's at 4.720%, Japan's at 1.605%. Versus last year, US rates are up 0.40 points, hinting at a softer stance. A 50K bond portfolio could see a $200 income lift this year over 2024. Impact: lower yields raise bond prices for gains but cut income. Advantage: calm in the storm. Approach: grab midterm bonds for balance without overreach. This might soften your portfolio by 5–10% in swings. Views on bonds? Subscribe and chime in below. Forex mirrors global trade rhythms, shaping everything from holidays to shipments. EUR/USD climbs to 1.1720, up 0.13% with ECB cues. GBP/USD edges to 1.3520, up 0.07% despite UK lags. USD/JPY dips to 146.90, down 0.07% as yen firms from Bojay moves. USD/CNY slides to 7.1500, down 0.03% amid tariff talks. USD/NGN ticks to 1.535, up 0.06% with market nerves. Lately the dollar softened 0.5% on safe haven shifts. Year-to-date it's up 5.9% against euro and yen. Impact: a weaker dollar helps exporters but tests local assets. Benefit: guard foreign stakes, move, leverage forex tools. Tariffs might cut costs by 1–3%. Keep watch. Commodities act as shields against rising costs, crucial for holding your buying power. Gold hits 3,560 toward, up 0.3% today, glowing as a safe bet in uncertainty. Silver reaches 41.70, up 0.5%. WTI oil rises to 63.70, up 0.3% on demand hints. Brent climbs to 67.50, up 0.3% with stability. Natural gas dips to 2.90, down 1.7%. Year-to-date oil's down 16-17% from oversupply. A $15,000 energy ETF might lose $2,400 annually, but today's rise adds 45s. Shippers gain as stable fuel lifts margins to 4%. Impact: rising energy hikes cost, but gold shines. Benefit: hedge with metals. Move: put 5-10% into commodities to offset dips. Earnings season uncovers corporate vitality and can shake stocks 5-15%. Scan this lineup ranked by market cap scalar ZS 4314B Q4 2025 due after hours EPS 047 Security Star. Nvidia NVDA 445T Q2 2026 post close EPS 102 Tech Giant. Royal Bank of Canada RY 19388B Q3 2025 pre-open EPS 330 Finance Leader. CrowdStrike CRWD 10286B Q2 2026 evening EPS 084 Defense Player. Snowflake Snow 6415B Q2 2026 night EPS 028 Cloud Data. Look for tariff effects and forecasts. Impact: outperformance could spark rallies. Move: follow earnings calls, tweak holdings. What stands out? Tell me below. Crypto brings excitement. Swings promise big wins or losses. Bitcoin hits 107,600 ARD up 0.03% today. Dominant, holding steady amid adoption pauses. Ethereum reaches 4,390 up 0.01% strong in DeFi. Solana climbs to 199 TROD up 0.22% quick for apps. XRP rises to 2.73 up 0.37%. Legal wins lifted. Binance Coin hits 870 ARD up 0.15% platform value. Year-to-date, Bitcoin's up 150% with tariff pressure easing. Impact: gains open doors. Benefit: huge potential. Move: start small 1-5% allocation aiming for 20-50% returns. High stakes, high rewards. Global tensions dip slightly. EU-US trade talks move forward. Tariff disputes with India ease. Taiwan maintains defense. Ukraine's missile tests succeed. Drones target Russia's fleet. US-Russia-China relations stabilize. Ukraine conflict persists but cools. Impact: supply chains may lift costs 3-7%. Benefit: knowledge strengthens. Move: diversify assets, lean on domestic stocks. Central banks steer through choppy waters. Fed at 450%, ECB 215%, BA 400%, SNB 0-100%, RBA steady. Fed teases cuts with today's job data. ECB tracks tariffs. Divergence backs the dollar. Impact: looser policy lifts stocks. Move: prep for cuts. Buy bonds now. Inflation update: US at 2.7% in July, steady. Core at 2.9%, tariffs a concern. UK at 3.8% up from services. China at 0%, easing, deflation risks loom. Global pressures ease unevenly, watch closely. Impact: mixed effects on borrowing. Benefit: plan wisely. Move: invest in inflation-protected bonds. Current vibe: stocks climb with tariff hope, bonds dip with lower yields, Forex dollar wavers, commodities rise, oil steadies, gold shines. Crypto holds strong. Overall, guarded optimism from trade talks with tech leading. Impact: chances in growth sectors. Move: diversify, focus on sturdy plays. Big takeaway: markets nudge higher with trade optimism. Back US leaders. Bonds for security. Gold and crypto for balance. Spread risks. Monitor Fed moves. Could dodge 5-15% drops or grab gains. Enjoyed this? Like it, subscribe, post your plan, turn on notifications. Questions? Leave them below. See you next time. Invest wisely, prosper greatly. Where would you put 10K today? Gold, crypto, or bonds? Let me know.